Matt Orton is now joining us. He's Chief Market Strategist at Raymond James Investment. Matt, great to have you back on the program. Thank you very much for joining us. I think, at least on this, on the channel here, on CNBC TV, maybe first time the words pivot I'm going to use this morning with regards to the data that we got through on Friday, Matt. Is this pivot worthy, what we saw? At some point down the line, I mean, the shocking number on the ISM services side out on Friday, and then, of course, I mean, the deceleration in wage growth in the jobs data. Your sense?
Good morning, Prashant. Great to see you. Good to be back. I think pivot is premature. I think the market has tried to predict pivots multiple times last year, and every single time they've been incorrect. And what I come back to as well that was a little bit overshadowed last week were the minutes from the Fed December meeting. And the Fed unequivocally said in their minutes that a premature loosening of financial conditions that was unwarranted because of investor sentiment was exactly what the Fed does not want to see and complicates their picture further. I mean, that's almost word from word from the minutes. And so I think the Fed is going to continue to be aggressive. We all have opinions of what the Fed should do, but what the Fed is actually going to do, I think, is what they've said, which is rates are going to be higher for longer. And so seeing the collapse in yields that we got on Friday and the market bounce, I think is a little bit premature. Yes, the data is definitely encouraging, at least on the labor front. It gives me a little bit more confidence that we can have a soft-ish landing. So we've talked about in the past that I foresee more of a real recession, not necessarily a nominal recession in the US. But one data point, while concerning from ISM services, doesn't tell us that much new. It tells us that a recession is probably on the horizon. Everyone already knows recession is going to be coming. It doesn't help answer how deep or severe, and I don't think it's enough to change what the Fed is going to do in February. Perhaps CPI, if it really, really comes in below expectations, might change the mind of some of the Fed members, but just when you had 17 of 19 members with terminal rates between 5 and 5.25%, I don't think pivot is yet in the cards.
All right, pivot is not yet on the cards. Got that. Matt, good morning and Happy New Year to you. The start of the year has been a pretty tricky one for global markets. But I was going through your note where you say that there are compelling opportunities in emerging markets in 2023. And within that, valuations have become more attractive in India. So is this a good time to be investing in the Indian markets? And if yes, what kind of an upside do you see through the course of the year?
So I think, Sonia, first, emerging markets definitely look attractive. Emerging markets as a complex have underperformed the world and particularly underperformed the US very, very sharply for a number of years. And I think we're finally starting to see that change from a technical perspective. It's looking better. But on a country-by-country opportunity basis, there's definitely some opportunities for countries that are a little bit more insulated from the global recession narrative. So India is definitely one country that we've talked about that I do continue to like. You know, it's down about 5% and change from the highs that we had at the, later last year. And so valuations have come down a little bit, but I continue to believe that we will see some EPS upside, particularly in sectors like financials, where I think you can see net interest margin expansion. In IT services, that's been an underperformer lately, but I think that's a little bit more defensive and benefits from some of the need to save money from technology and companies over in the US. So I definitely think there's opportunities. I would wait to see how the next couple of days play out, though I'm in no rush to be putting money to work in this market. I think you want to wait for more severe downturns to be putting money to work, because if there's one thing that we know is in the cards, it's that there's more volatility to come. So let the market come to you.
All right. Hi, Matt. Good morning. I'm looking at your emerging market strategy, and as you said, you like it. Southeast Asia, LATAM, as well as India. What's the pecking order out there? And also, if you could tell us, in this preference for emerging markets, the toss-up between India and China.
So yeah, that's a great question, Nigel. And I think right now, given how the market has been performing and just given the rally that we've seen in China, Southeast Asia.
Okay, I think there's some issue with that video, Matt. So we'll do one thing, we'll try and touch base with you again. But we did get your viewpoint. You do believe that there are compelling opportunities in the emerging market space in 2023. You prefer India, Latin America and Southeast Asia and emerging markets. And the setup in India bears watching closely, where you believe that valuations have become more attractive in a market like India. Got that point. Thanks a lot for stopping by and speaking to CNBC TV18. We'll try and resume that conversation when we can. Slip into a quick break, but our list of top stocks is lined up in just minutes from now. Stay tuned.